Welcome to my channel and happy Friday. Let's start talking about Bitcoin, how it performed today, why it performed the way it did, what the data is showing, and what the market did as well. Let's get straight into it. So currently, the price of Bitcoin is stagnating around 95,000 and 98,000, and there's a clear reason for this. So the PPI metric was announced yesterday, and this basically measures inflation. The numbers were above the consensus. This wasn't great. However, the market reacted in a different way. There's two reasons for this. This is because apparently the combination of PPI and CPI, which was also announced this week, may result in a quite reasonable core PCE metric, which will be announced later this month. So that's the first reason. There's always another reason, which I'll get into as well. Basically, President Trump, he has been announcing that he will impose tariffs all over the world, including Mexico and especially Canada. And basically yesterday, he announced that he will impose a new round of tariffs, which is called reciprocal tariffs. It is designed to retaliate against other countries which are also imposing tariffs against America. However, he decided to commence these tariffs from the 1st of April. Not today, not tomorrow, not on Monday. This was a great relief for the stock market, because it's not going to have negative impact straight away. And that's why the S&P went up by 1% and NASDAQ went up by 1.5%, which is insane. Individual stocks performed quite well as well. There has been a lot of talks about AI chips and NVIDIA and how the AI demand is going to be strong this year as well. That's one of the reasons NVIDIA went up yesterday. There has been a lot of talk about Tesla as well, especially because the State Department may buy $400 million worth of Tesla's brand new Cybertrucks. I wish Australia does the same. That's also the reason the stock market was quite up yesterday. So let's also look at the 10-year yield as well, just because it does give us a good idea in terms of how the market has been reacting. So the 10-year yield at the moment is around 4.5, which is around a 1% decrease from yesterday. That's not too bad. The reason for that is also Trump's reciprocal tariffs, since the tariffs will be imposed from the 1st of April. That was a huge relief for the market as well. Okay, so let's look at the economic calendar. So the PPI was released, as you can see, and the PPI was above the consensus, which wasn't great, because it shows that inflation hasn't been controlled so far. Apparently, the combination of CPI, the Consumer Price Index, and PPI, which may result in a great core PPE, which will be announced later this month. And apparently that's the reason the market went up. Just because if the PPE comes out, which may support the narrative that inflation is under control. So that's a metric that we also have to see in the next few weeks as well. It is quite a relief, just because market reacted quite negatively because of CPI and how it showed the market that inflation is quite bad. That definitely has been a narrative for the stock market, and especially Bitcoin, just because it's a risk asset. It does, have a very negative reaction to any sort of macro event. Okay, so now let's talk about the on-chain data, which is something I also want to focus on my channel, just because I want to focus on macro events, on-chain data, and technical analysis. I think the confluence of all these different perspectives will at least give myself a sense of what's happening in the market at the moment. And hopefully you can benefit a thing or two from this video as well. So let's look at the how the Bitcoin spot market volume has been evolving for the past few days. Now, the volume has been decreasing. That's not something that we want to see, just because more volume, more trading, more optimism, more momentum. And now we don't see this at the moment. We see quite the opposite thing, which isn't great, but there is a valid reason for this, which is macro headwinds as well as lack of major news for Bitcoin. Let's also look at the ratio between the spot and the derivatives market. So the ratio of spot trading at the moment is decreasing. That's also something that we don't want to see. And the reason for that is this basically shows us that there's more speculation in the market at the moment rather than long-term investing. Because think about it. If you want to invest in Bitcoin, you're going to invest in the spot market. You're not going to invest in the derivatives market or the options. Options and derivatives, they're great tools, don't get me wrong, but they're designed to be more speculative financial instruments. So that's the reason we do want to see the spot market to recover. The same can be said about the Bitcoin ETFs as well. We've been seeing a negative inflow into Bitcoin ETFs for the past few days, and the reason for that is the same. And we have massive macro headwinds and also a lack of any positive, detailed news about Bitcoin or the Bitcoin strategic reserves. Let's also look at how the volume for the Bitcoin spot market has been evolving for the past few days as well. We did see a massive outflow yesterday of 328 million. Now, that's not good. We've been seeing continuous outflow for the past 10 days or so. The market will bottom out and then recover. Bitcoin always does this, but it is going to take some time, and it is a process that we have to go through as well. Just to sum up, in terms of volume, we do see massive outflow in the spot market, in the ETFs as well, and the spot derivatives ratio is going down, which shows that there's more speculative behavior in the market. Let's also look at liquidations, which is important. There was $42 million worth of liquidations yesterday, which wasn't a huge increase from the day before yesterday. If we look at the liquidation heat map, we do see both long and short positions, which means the price of Bitcoin may be quite volatile just because Bitcoin has a tendency to liquidate massive liquidation lines. This is always something that Bitcoin does. We may see a similar price action this time around as well. So let's get into the technical analysis. So Bitcoin has been quite volatile between $95,000 and $97,000. We did see a price recovery once the PPE was announced and Trump delayed tariffs until the 1st of April. So the price of Bitcoin bounced from 95 to 97,000. There is this downward trend line that started from the 30th of January. Unfortunately, the price of Bitcoin did bounce backwards, and now it is around 95,000 again. So let's look at the weekly time frame. Let's look at the candle first. Candles do show a big deal about what's happening in terms of market sentiment and price action as well. So the weekly candle seems to be quite undecided just because the weekly candle has both a lower wick and a higher wick. This basically shows that the price is fluctuating between 95,000 and 98,000. In my opinion, this has been the case for the past few weeks. Ever since late December, there hasn't been a notable trend line, and the price has been more of a range, ranging from 91,000 to 98,000. So that's the first thing that we see. I guess what's good about the weekly candle, the lowest price of each candle has been elevating from 91,000 to 95,000. It is very easy to become pessimistic just because at times it seems like the price of Bitcoin hasn't been progressing. But if you look at the lower price of each weekly time frame, I believe the price has been progressing. Also, something that we notice is the MACD in terms of there has been a dead cross, which is something that we don't want to see. Last time that dead cross occurred was April last year. The market stagnated for a few months, which may repeat this time, but we never know. When a dead cross happens, we never know whether it's for a few weeks or a few months. That's something that we really don't know. So the first thing that I notice, the lower price on the daily time frame has been elevating as well. According to the Dow theory, we do see higher lows ever since the start of February, which is great. However, the price has been rejected countless times at 98,000. We see the price of Bitcoin being rejected once, twice, 3 times. So the resistance line at 98,000 is very tough to get through. Another thing I would like to mention is the closing price today. Personally, I will pay attention to where the price of the daily candle closes today, whether it closes above $95,000 or below $95,000. I think based on where the price closes, this is going to have a huge impact on market psychology, just because it's going to show whether the support line at $95,000 is sustainable or not. And at the moment, it is showing quite promising results in terms of sustaining that $95,000 level. So the final thing I want to mention also, so if the price of Bitcoin penetrates $98,000, so the price target for the upside can be $102,000. This is also a major resistance line, which the price of Bitcoin has been rejected twice. So this is also a very important resistance. On the other hand, so if the price of Bitcoin can't sustain $95,000, I think the price target for the downside is going to be $91,000. So the $91,000 support line is quite significant. During December, we saw multiple bounces against the $91,000 line, and there's a high chance that we're going to see the same result if the price goes down to $91,000 again. Let's look at the 4-hour chart as well. I think the most important trend which is going on is the downward trend, which started from the 30th of January. It has been quite a consistent trend just because we did see multiple rejections against this line ever since the 30th of January. And we did see another rejection today as well. So it is showing to be quite pessimistic, But I personally would like to see how the price of Bitcoin reacts between the support line at $95,000 and a downward trend line. It may show that the trend line persists, and based on the results, if the price of Bitcoin penetrates the downward trend line, I think Bitcoin has a high chance of continuing a sideways movement for the next few days. On the other hand, if it gets rejected again, I think the price of Bitcoin may fall below $95,000. At the moment, it's nearly weekend, so I don't think there's going to be a huge price movement. So finally, there's also something that I noticed with the trading volume as well, where there has been a decrease of trading volume on the chart. And this is basically a spot chart. For example, on the 3rd of February and the 9th of February, we did see a lot of influx of buying positions. This hasn't been the case for the recent bounce, and that's the reason Bitcoin didn't go above the trending line. We really need to see that volume for Bitcoin to take off above $98,000. This will happen, and the spot market really has to recover until then. And for the spot market to recover, we need the optimism in the market to recover, as well as more positive news for Bitcoin, such as the strategic reserve, more corporate adoption, more local government adoption, ETFs, and so on. I believe it will happen, but it is going to take time, just because interest rates won't come down for the next few months, and we may have some market anxiety based on Trump's tariffs as well.